going to talk about the property. Stay with me in tune for the next 45 minutes or so. Let me give as much information as possible. Okay, I mean, this disclaimer slide is just to let you know that I have done my very level best together with my team of research department to put some facts for all of you to understand. But nevertheless, please do your necessary due diligence, speak about your own financial abilities and so on. Is in no way meant to do any form of an emotional selling as much as factual. I'll try to update you. Okay, what is the main key focus today here? Is this what am I going to do here? Is this we are going to recap the 2024 property market very briefly. As I said, I will definitely be less than 55 minutes for sure for the whole presentation. And where are the opportunities? And one of the concern here is this: some people always want to think that, what about freehold versus 99? Are there value proposition between these two? And should one really seriously consider freehold properties versus 99? Is it worth paying the additional premium? So let's see what else that we can talk about. Okay, very briefly, we know the macroeconomic challenges in 2024. We definitely had a lot of concerns about slowdown in major economics and persistent inflation. But regardless, I must say 2024 did ended fairly well with so much more optimism. People were very optimistic about 2025. But this was things which I didn't need to highlight. But as far as some of the key highlights were, on the left hand side, if you see, there were very much of a slower sales in first half, lower GLS land bids and land rates. Developers were very cautious, and coupled with another round of a cooling measure as far as HDB in terms of the loan to value amount reduced by 5%. But on the other hand, the second half was we saw some record numbers in terms of new launches, sales performance. So I would say it's two half performance. First half not so exciting. Second half was exciting. But what it all meant in terms of overall for the real estate market. Okay, yeah. But in fact, the first 9 months was a bit sluggish. You could see the overall property price index was going at very marginally lower growth, however, we had a strong finish. Yep. So this is what that we realized that in the fourth quarter, it had a very strong take-up rate. Prices went up by almost 2.3%, and the whole year ended with a 3.9%. Okay, and it was very, I must say, exciting performance. Okay, this seems to be a busy slide for those of you who are listening, but all I want to tell you here is this: from this slide is to tell you how the market have actually performed and why the market today is very different. I mean, if you look at it in the past, you could see we are going back to more than 25 years. During the Asian financial crisis, the property prices went down by 40%. Then the dot-com, it went down by minus 20%. The Lehman crisis in 2008, it went down by 25%. But then what has happened? How come while we are waiting for the property prices to go down, but over the last umpteen years of almost coming to the last 7-8 years, property prices have always been on the upward trend, irregardless or even with numerous cooling measures, including a crisis of COVID in year 2000. What we witnessed was property prices has been stable. Yep. I think why I want to talk about it in this particular slides here is this. One of the key thing here is I just want to impress upon almost now coming to close to 300 of you who are here listening to this short session is to say that in Singapore, the real estate market today is very, very different. Basically, you can see all the bars, the orange bars of the cooling measures that started from year 2009, the multiple rounds of cooling measures in more than 10 over cooling measures that were put in place was to make sure that we don't have speculators in the market. Why did the market drop by 40% during the AFC or dot-com of the global financial crisis, 25%? Why is it so not happening in the last 7-8 years? Simply because of the government has introduced, as part of the cooling measures, the additional stamp duties, the seller stamp duties, the loan to value, the TDSR, total debt servicing ratio. Therefore, unlike in the past, people can come and buy and just sell options, switch options, and by just speculating, today anybody who go, you have to hold on to the property for at least 3 years. If not, if you sell before the 3-year period, you'll have to pay a seller's stamp duty as well. So what am I trying to say here is this: in current market, what we have witnessed, the people who are coming to buy the property have already gone through the various hurdle of TDSR and all other requirements. And then when they come in, they also have the holding power to hold on to the property for a period of 3 to 5 years. That's why even though there's a small crisis, they still hold on to the property. As long as the buyer have the ability to hold on to the property, they can ride through a crisis. And that's why the property market has been relatively stable over the last 5, 6, 7 years. Okay, this is something for all of you to understand. Why is it so our real estate market is not facing a downward trend as compared to before? This is just to give you a broad numbers as far as how the property prices have moved up over the years. And you can see, in fact, in year 2021, the private property price index went up by a double digit, 10.6%, and then we had an 8.6% in 2022. Last year it was a little bit tamed down because last year in April, if you remember, the government came out with one of a very, I would say, is definitely a very heavy policy as far as foreigners are concerned. The ABSD increased from 30% to 60% stamp duty over and above the basic stamp duty. Can you imagine a foreigner coming to buy a property in Singapore at, let's say, even 3 million or 4 million or 5 million, having to pay 60% stamp duty? It must take a foreigner with huge amount of guts for him to come and invest in Singapore. Has that brought down the property prices since last year, April? Yes. And we can see its effect, how the market has now turned around in terms of the last year's growth has been very much muted. In fact, for the first 9 months, the property prices only went up by 1.6%. Only the fourth quarter had a 2.3%, that overall was 3.9%. Okay, so when we talk about the real estate market, we always talk about the different segment, and it is something interesting for you to understand. And for example, here I'm highlighting, this is CCR, this is RCR, and then you have OCR. What do we meant by this OCR, RCR, and CCR? Core Central Region, rest of Central Region, and outside Central Region. Okay, CCR is District 9, 10, 11, the Orchard Belt, and as well as the belt that is at the Business District in Robinson and the Marina Financial Center. Okay, that is CCR, Core Central Region. Then we have the RCR surrounding that. It could go as far as Marine Parade and Balestier, Novena, Queenstown, and these are all the RCR. Toa Payoh, and even though Kallang, which is just the outskirts of the core Central Region. Outside Central Region is anything from Woodlands to Tampines to Choa Chu Kang and wherever it is. It is part of outside these two areas. Why am I trying to highlight here is this: the property prices has performed differently. If you look at it, the overall property prices, just now we said that it went up by 3.9%. You can see here, right? I'm putting an arrow there, 3.9%. And look at it, the landed property last year didn't go so high, barely 0.1, as opposed to in 2023 was 8% and 2022 was almost 10%, 9.6. And then if you look at it, the non-landed, we are talking about condominiums, right? So in fact, the non-landed property went up by almost 5%, 4.9. That's why you see, when we read the headline of the newspaper, we say, oh, property prices went up by 3.9%. But it is not really true. What segment are you going to invest? Therefore, if you are investing or if you are buying in any of the property in the core central region, last year the overall property prices went up by 4.3. The rest of core central region is 6.2 and outside central region is 3.8 versus 13.7 in 2023 and 9.3% in 2022. So this is broadly to say the demand and supply mechanisms are different as to where you are investing. This is how the property prices have moved last year. Okay, these slides just giving you, as far as the new launches are concerned, the average per square foot over year on year, how it has moved. And therefore here you can see in terms of the property prices, only the core central region actually it is minus 6.6%, while the rest of the other areas has done more growth by 7% and as well as 3.4%. And if you look at it for EC, executive condominium, has had the highest growth of 20%. Why? The price gap. Because when all others has moved to 2003, 2006 and 2009, the EC was lagging behind and suddenly there was a surge in the executive condo price that has increased by 20%. Okay, so this is just for you to have a better understanding. Okay, how did the new launch market perform in 2024? The three different shades of color, the blue, gray and orange, are showing the indication of, in terms of all the property prices that all the properties of the different segment. So this is by quarter. First quarter, second quarter was the worst numbers. Why the first half of last year the numbers wasn't good? Because there wasn't enough launches from the developer. But on the fourth quarter was one of the best performing. If you look at it, in fact, since after the COVID, we had 3,500 sales because of many launches took place in the last quarter. Okay, so this was our performance. But overall, if you look at the number, last year 2024, the number was 6,550 versus the year before in 2023 was 6,421, and it is just slightly above, but is non-comparable to 2021 and 2020, where there was a sudden surge because of supply after COVID. Okay, but the key thing here is this. What am I trying to highlight here again? Here is this: is the market very positive for Singaporeans to enter the market? Who are the people who are entering the market to buy such properties? Look at it. When the government introduced the cooling measures, the government was very clear in the mind. Foreign interest in residential property in Singapore as an asset class continues to be strong, and therefore if we don't take early preventive measure, we may see investment numbers both by locals and by foreigners grow, and this will add stress to Singaporeans who are looking to buy residential property principally for owner occupation. Therefore, what have the government done? Even Singaporean buying a second property increase the ABSD from 17 to 20%, second to third to 30%, foreigners 30 to 60%. All I'm trying to say here is the government intention is very clear. Singaporeans who are upgrading from HDB to private property, they don't want to have other competition. People who got so much more money want to compete, can, but you pay the government more stamp duty. So that's why we notice the Singaporean form the bulk of the purchases either in the new launches or resale market last year. Okay, this is how I meant by that. You can take a look, and if I can illustrate, let me annotate and show you here. Look at it. Foreigners used to be the whole of last year, only 1.4% of the purchase were by foreigners, as opposed to used to be, look at it, in about 13%, 19.4%. That was more than 10 over years ago in 2010, 2000. Foreigners formed more than 10%. Because of round of the cooling measures, we have never witnessed the numbers to be so low as 1.4%. Why? It makes sense. Who wants to pay 60%? And then look at the Singaporean. In 2010 was 70% of Singaporeans bought, but now it's 82%, 82.5, the highest percentage of Singaporean buying, yep, the private properties versus the PR. So actually 98.6% are all Singaporean and PR who are not subjected to the hefty ABSD. So this is something that has been the market. So if you ask where the demand, we will let you know soon. I will give you some other data to say why public housing upgraders are making the bulk of the purchase in the OCR and RCR region. One of the key things I want to let you know, for many people who are currently staying in HDB, is this the right time should upgrade to a private property? Why am I going back to history? Look at it. When HDB ramped up the BTO supply 100,000 flat over the 5 years of 2011, 12, 13, 14, 15. During the 5 years, HDB brought about 100,000 HDB flats. What was the effect of it? And again, now look at it. Same thing, 19,600. And you look at it here below, if I can highlight to you here, the same thing, you will see the government is bringing another round of 100,000. But this time here is over a period of 2021 to last year. Okay, so that's where the government want to bring the 100,000 is simply because government is also concerned that the HDB prices, you see here, total here, this is the one I'm saying here, total is 100,000 flat over a period of 5 years. Okay, why? Only by bringing in more HDB BTO flat, the government hope and aim to stabilize the public housing. How has these things has performed? Here is this, the 100,000 BTO flats over the last couple of years ramped up, has more or less trying to stabilize. Main reason here is this. Remember earlier I showed when the government brought about 100,000 flats from 2011 to 2014. What was the effect of the public housing? Negative, 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 negative. For a good 6 years it was negative. You can see all the red color here, right? In terms of the negative year-on-year change. Then the property prices only started to move up after COVID. After COVID, everybody wanted to have a bigger space and so on. Property prices in 2020 went up by 5%, 2021, where you can look at my cursors, 12.7%, 2022 was 10.4%. Then the government introduced further tightening. You remember, if you like, in September 2022, the government say private property downgraders have to have a wait out of 15 months. Okay, if you want to buy a HDB, because what the government felt was they do not want the private property owner whose property has appreciated go to HDB to right size, but at the same time they have all the cash and then they push the price of HDB. Has it got some effect? Yes. 2023 it went down by 4.9%, but last year the demand was really strong. We were almost hitting 10%. So this gives you a glimpse of how hot is the public housing market. In fact, if you look at it, the last 5 years, the property price index has increased by 50.3%. Just in the last 5 years, on average, the HDB owner who has been staying in the place and not selling the property have a 50% increment in the price index, which means as an HDB upgrader, are they in a good position to cash out, to sell the property and do the right size? Okay, while the government is coming out with many more BTO supplies and so on, eventually the double-digit growth of HDB is not sustainable and it's not likely to happen. And then you look at the volume of HDB in 2024, we had a 28,876, which was higher than the 26,000 in 2023 and 27,000 in 2022. So the HDB market has been resilient last year because of the property price increase. In fact, for the first time in the history of Singapore, we witnessed more than 1,000 unit selling at above $1 million properties. In fact, if you look at 2004, last year, The last 3 quarters, second quarter, 236 units, third quarter was a record 331, and the fourth quarter had 285. Will this number continue to be more HDB flats selling above $1 million in 2025? I'm saying yes, this number will keep going, but to put in context, it's still not so significant because you're only talking about 1,000 out of 28,000, which is less than 4%. Okay, but on the other hand, all the 28,000 property that was sold last year, the price index has already moved up by 50%. Everybody make more money, but some people make much more money when they are sitting at a very good location, being able to sell 1.5 million, 1.4 million, 1.6 million. And if they have bought some of this property 10, 15, 20 years ago, they're able to have a huge amount of cash outlay that they are able to upgrade to the next property. Okay, so now let's talk about in terms of the falling interest rates and how it will impact the Singapore property market. We know the federal has been increasing the interest rate for some time, ever since after COVID, to fight against inflation and as well as to greater prudence. But on the other hand, towards the later part of last year in September, federal has already went to have a cut in. And why they say that it surprised many investors, because people only expected a 0.5%, but overall you see last year there were 11 hike from 2022. The interest rates keep going up, and then there was a plateau for more than a year. They were just holding on tight. And then last year, September was the first cut, 0.5 point. And then November was another 0.25, December. So anyway, I'm just letting you know, what does it all mean? Okay, from a high of 5% and start cutting down the interest rates after 11 hikes. Okay, there are some very positive things that you can see. Okay, lowest rates but signal caution because of inflation uncertainty. This was excuse me, last year's article. But overall, the direct impact from the interest rates cuts are it actually spur the economic growth, and it also increase the market confidence. That's why you see, excuse me, why last year in November, suddenly there was a surge in the number of people who were entering the market, because September was the first cut, November was the second cut, and they know they were expected to have more cuts. So people didn't want to wait, because when the interest rates really go much lower, more people will enter the market, and therefore that's why they started to have the greater confidence in the real estate market. Obviously, when the interest rate goes down, you are going to pay a lower mortgage installment. Okay, so even for business and all other things, it spur the economic growth. Okay, what does it mean here is, let me give you a glimpse from this slide. If you can understand, let me here. Yeah, you see, when initially the federal rates was at 5.5, with the 0.5 cut, it went down to this, and another 2 more cuts to go to 4.5, and we are expecting by end of the year, it may well go, this is prediction, it may well go to another 1%. There are maybe another 4 cuts of 0.25 or so. This is likely to happen because all signs are, as part of the interest rates are high to spur the economy, there is a value possibility of further interest cut, and this is by UOB forecast as presented. Okay, and how does that help? Because when the interest rates are cut, in Singapore, there is a correlation to the SORA, 3-month SORA, as far as what is the interest that you are going to eventually pay, SORA plus whatever the plus premium, and therefore you can see from 5% in Singapore, it was 3.5, and if it moves on by the fourth quarter, if the US federal interest rate from 4.5 can come down to 3.5, the possible here in Singapore can be a 2.09 plus your spread. Okay, so is that a good news for homeowners? Yes, and that's why the confidence straight away came up in Singapore for people entering the market in a much more stronger way in the last quarter of last year. So what can we expect in 2025? I look at it generally 2025 people are very optimistic in many front, from the economic recovery and further cuts of the US federal, and also stabilizing costs and goods of services, because there isn't another further increase of GST. Things are coming into greater sensibility overall. And when we look at it, the economy actually grew more than our many forecasts we had it. It exceeded the estimates. And as 1st January, when our Prime Minister says Singapore economy grew 4%, government to cushion impact of cost of living increases. Okay, and this is also an election year. I don't want to be speculative, but generally people will hear a lot more good news and a lot more kind of things and incentives and some other welfare support also. Okay, so how has it changed? Imagine you look at it. When you look at it in January 2023, which was now coming to 2 years ago, when the interest rates federal were going up, the bank increased to 4.25, 4.5, 4.3, all of 4.25 to 4.5. But now we are talking about November. Even I'm only taking the rate of November, December cutoff. But today one is able to secure an interest rate at 2.5%, 2.55 to 2.7%. So does the banks, in fact, the lowest home fixed interest rates in Singapore is Bank of China, 2.45%. Okay, that's how competitive foreign banks and local banks are competing for the business. Okay, so that's the very positive thing. That's what we meant by cost of borrowing goes down. When the cost of borrowing goes down, people have greater confidence to take a bigger amount of loan and to buy their dream homes or their long-term properties they want to do. Okay, so where do I look at the property demand coming from, other than the lower interest rates and a positive economic recovery, stable job market, because when the economy is doing fairly well and people don't get retrenched, people have got, and not forgetting one thing in Singapore. Why in Singapore the real estate market is resilient? Many things, right? We have a stable government, we have a strong currency, coupled with small size of land in Singapore. The whole of Singapore, the land is only that much of limited. And the fact that here is this, we have a growing population. One cannot rule out the fact that the growing population will means you need more housing. Let me just give you a thing. Singapore's population crossed 6 million. Can you see the bar? 6 million as of 2024. Actually 6 million and 36,000. What is interesting here is this. If you look at it, almost in every 10 years, you will have a 1 million. You see, in year 2000, let me annotate and show you here. You see here, year 2000, what was the number? Exactly 4 million. 4,027. You take 10 years later, what is the number? 9 years is 4.9. Exactly 10 years later, year 2010, what was the number? 5 million. Exactly crossed. Then exactly another 10 years, but it happened to be a COVID year. So it take a little bit more, another 3 more years. When did we cross? Yep, 2024, 6 million. Yep, in 10 years, on average, our population grows by 1 million, and the last 13 years, another million. So will we go to 6.57? I don't want to speculate, but our population has continuously grown. And at the same time, when the population grow, and look at the price index of the real estate market, okay, the PSF, the average PSF, over time it has grown from, you look at it from the days of the 550 to the days of below 1,000. The minute it crossed in year 2010, when the population was 5 million, you see here, we first time, because before that, the average price, we never hear of above 1,000. Then it goes on from 1,000 as the population go from 5 to 5.5 million and coming close to the 6 million. Then you see it has already crossed the 1,500 mark. And today we are saying we are hitting the average price of $2,000 per square foot, the average. Okay, so What does it all mean? In Singapore, despite all the cooling measures, which is to make sure the property price are sustainable in its growth, yet the demand is strong. Okay, so one need to understand this demand perspective, why the property prices are resilient is because our population increasing. Okay, now let me just look at overall in terms of the forecast. Where do I see the property prices eventually hitting? For this year, for 2025, we are still forecasting a price increase of 3 to 4% for public housing. And as far as the HDB homes are concerned, our forecast here is 5 to 7%. We are a little bit more conservative because I don't want to be too robust. And I think 3 to 4% is alongside with last year. And that's been very modest, but we will have to continue to monitor. We will see whether HDB can outperform because there's a very strong demand, the market, and if the interest rates are keep coming down, we may outperform this. But as I said, I've taken a conservative approach. This is what we are expecting. But I also want to say why the property prices in Singapore generally seems to be holding. There is also another reason, especially for new launches. New launches with effect from 1st June 2023, the authorities have done a standardization of the GFA definition among agencies of SLA, URA, and BCA. Okay, what does it mean? Basically, it means the developer's ability to sell will not include areas that are considered as void spaces or areas that are the middle of the wall or floor areas that is not being usable. And does that have an impact? Yes, let me show it to you. So in the past, the AC latch where you put the aircon compressor, which the developer used to make it sometimes quite a big space where you can put but you're still paying $2,000 per square foot. Now, under the new definition, the AC latch is not part of the sellable area. And then you also talk about the floor slab and the external wall. Where should you? Do you take from inside, outside? But you go and take from outside, but you have a brick wall, you're also paying for the wall, but it's not the usable space. So in other words, the estimated reduction of sellable floor area for the developer after these measures of harmonization took place, they lose the sellable area by 6 to 8%. What does it mean? Okay, let me make it in a very simple words. Before this rule come about, because the developer can sell the aircon latch and the middle wall and whatever it is, he is collecting, you are paying 6 to 8% more for areas where you cannot live. You cannot be sitting at the aircon latch. Yep. Now that the government say, no, you cannot count this as part of your GFA to sell, therefore the developer lose. Therefore, in order for him to be able to recoup his cost, he have to sell higher as well. Let me give you a very simple classic example. This one is why I want to say here is this. Sometimes we say, hey, look at it. This is the land price. This is what the developer purchased the land price from the GLS. Like Lentor mentioned, the developer bought the land price $1,200. Or Hillock Green, the developer bought $1,130. That means the land, just the bare land, the developer paid to the government at per square feet at this price. Okay, and when he sell, the average transacted price, you see they sell at 2,176 they bought. But then you look at it, harmonization took place from 1st June. Remember just now I explained? And actually the developer bought the land at lower price, 985, 982. How come suddenly? But some of the people thought, wow, the market is not so good. Therefore, the developer decided to bring down the price. Instead of paying 1,002 here, he paid 985. Therefore, he bought the land $200 cheaper. Therefore, he must sell cheaper. But look at it. The developer sold 92%, 492 units at what price? 2,271 versus 2,124. Basically, he sell $150 more, even though the land cost is $200 cheaper. Does that all make sense? Well, as a buyer, we think, hey, developer bought the land cheaper, but not forgetting the fact that he may be losing, not being able to sell. I mean, people who bought earlier, Lentor Modern, Lentor Hills, developed the 99% all sold, they are paying for the aircon latch. They are paying for the wall perimeter in between. But the buyers here are not paying. Therefore, the cost goes up. So that's why you have to understand land bid price go down doesn't mean the selling price will go down. Okay, this is just to explain if any one of you are looking at reading the market. Okay, so what is propping up the home new prices in 2025? Because you look at it, is still the labor cost is not cheap and the material cost has not come down. The harmonization definition, that's why I took the last 3 slides to explain these things, and the land prices are still firm at well above 900,000 for good sites and above 1,000. As long as the land bid sites are strong. In fact, if you are aware, executive condominium land sites have already exceeded $700. If developers are paying for EC, which is a subsidized land site, for based on the land sites is only limited to EC purchase buyers, already 700, then the private land is 1,000, the difference is only 30%. So that's why we think the new home prices are not expected to come down in 2025. In fact, I given a matrix. If you look at it, where is the safe zone and what are we expecting? When we look at it as far as the thing, I give a range. If you are buying a property in outside the central region, okay, so which you remember I earlier explained where are all the outside central region here, OCR, outside central region, then the average price today we are talking about 2001 on the very low side and 2004. I mean, it's something like Chuan Park is also OCR last year, did so well. 75% was sold at the launch weekend, and we're talking about 2,500. They are exceptions. But by average, you are looking at a 99-year leasehold OCR project. The average is today 2002. Okay, but some higher floor, you're about 2003, 2004, and we are talking about a 99-year. What about if it's freehold? Obviously, the price, there is a premium one will have to pay for a freehold development. So this is just to give you a range, what is a fair price in today's market. Okay, as I just take a short break, I'm just letting you know, if you like and if you want to receive many more of our report, like is it a commercial or even residential, you can have completely free access, approved by me, done by my research team, and you can just keep track, and this is just free for you. All you need to do is scan and be a PropNex friend, and you can always unsubscribe. You don't need to pay $1. You can get a lot more. You get some other rewards. You have an access. You can some of our insights to our information or video. We put it in. Everything you can get just being a PropNex friend. I just welcome you to just take the phone and just take the QR code and enjoy all this information free. Okay, so that was something that I just wanted to highlight to you. So let me just see if this is what I was just saying. If any one of you who still want to get it, then you can do that. Okay, let me go back to the next slide. Okay, here, let's see. Okay, where are opportunities and good deals, and what are some of the things that we want to highlight? You see, to me, good deals are in every part of Singapore. Okay, but what constitute a good deal? Obviously, you can have the best of the location. If the price is not right, it doesn't make sense. Okay, or for that matter, the price is okay, but the product design is not so good. The rooms are small, or it is tapered and you don't have a good view, or it is at facing on a highway, you may not like. So what, in my view, constitute is a combination of 3 factors. First, locational attributes. If you can walk to an MRT without sweating, it's already a super plus point. Okay, that's what. Next, in terms of good product and quality. If you have a freehold versus 99, stand down freehold will win, correct? Then, what about the product quality? The developers, what kind of finishing, what kind of lifestyle you get. So this is all part. Next thing is pricing. At the end of the day, you can have the best of the location, best of the product, but nobody is willing to pay a premium way above the market because you also think of exit plan. Because today it can be new. 10 years down the road, you must also sell and exit. And if you're paying way above all the transactions, the property around, then you may not be able to pay. So a good ideal should have the combination. And if you can find, not necessarily right at the center of the dot, within this framework, anywhere within this framework, maybe the price is more reasonable or it is more good, and then that is spot on in my view when you want to look at where should your property be. Now, let's talk about a little bit of a freehold and a 99 here, new launch versus a 99 resale. The key thing here is this, obviously we have studied a potential of substantial price appreciation over long term. That means a freehold property after 10 years, 15 years, 20 years, 25 years, 30 years, it still holds its value versus a 99-year property new launch. For the first 10 years, you may not see a difference in terms of its appeal to buyers in the secondary market. Once the 99 goes to 20, 25, 30, that's where the freehold will start to accelerate in terms of the gap between the demand. I mean, it's very understandable, right? Freehold got better potential of en bloc and legacy and whatever versus 99. A 99, one of the key thing here is you have a better rental yield because when it is a freehold and 99, a freehold, the market expect one to pay at least 15% more. I cannot be selling a freehold forever to you versus a 99-year leasehold at the same price. So there is a demand and people are prepared to pay a premium anything between 15 to 20%. Okay. One of the thing about 99 resale will be much lower in terms of price because the lease has already expired. So one have to be very, very mindful about the resale 99. You can still buy. I'm not saying that you can't buy, but hopefully not with balance less than 70-year lease. Because if you buy a property with less than 70 years, you stay there for 5 to 10 years and you want to exit and you want to sell to someone with 50 over years, you must be very mindful. In fact, there are some restrictions on even usage of CPF money for the next buyer if the lease is below 60 years. So these are all the implications. Okay. Next, freehold versus leasehold. Freehold premium. This article was written and by research Nisha Ramachandani, and she said that in the market, the data showed, there was a study over a period of time to say that people, a freehold property generally goes for a premium of 15 to 20% above and around for 999. But so for freehold is given that there is a premium one pays. Why? Because as we know, it's a legacy planning in the sense that you can hold, you don't need to worry about the market, whether there's a crisis. Just as long as you have the holding power, you pass on as in a legacy planning, the next generation can still have that value intact and they can decide when to dispose of it. Give you a very simple analogy and an example of this thing. You see, the 191 units at Geylang Lorong 3 will have to vacate. This was in 2021. In fact, 2017, the article came out. Geylang plot returns to stand when lease expires, and that's where they all now have to just load up and leave. But what am I trying to say here is this. 60-year lease of 191 terrace houses, Lorong 3 expired in 20. Owners of these properties are not entitled to any compensation. Is that the same story for 99? The answer is yes. 60 years old. But can you imagine people who bought it 60 years ago, this in the terrace house, assuming they pay $10,000. I'm talking about 60 years ago. A freehold with a 20% premium, one would have paid $12,000. One is 10,000 at Geylang, you go Lorong Melayu, another two are near Eunos, Mazuki or whichever it is, you would have paid 12,000. But the 12,000 today will be 3.5 million to 4 million after 60 years because it's still a freehold land versus a 60-year leasehold landed property, zero value. People buy 10,000, zero. People buy 12,000, 3.5 million. You see the world of a difference. That's why a freehold has its own positive legacy planning. Okay? Not a risk to returning land, and this is what I say, freehold will remain the ownership unless acquired by state via compulsory. But even if you, it doesn't mean freehold the government cannot take back. If there is any major expressway, our government has got something they can, but they still have to pay you a fair market value. Then you can take the money and can buy another property, another freehold if you want to. Okay, that's the advantage. This is what we say, that safeguard lease depreciation. You see, when you're 99-year leasehold versus a freehold, the price in terms of the lease, it doesn't. But the minute when it goes below 60, you see the 60-year mark, here the depreciation is a bit slower pace. Then after that, wow, very fast decline. Okay, this is the disadvantage. So especially if you are buying a resale 99, you must be mindful at which part of the curve you are entering. Okay, so higher potential for en bloc. Freehold will always be in stronger demand because you know it is legislation gazetted that all government land can only be maximum up to 99 years in Singapore. So the freehold are all the older Akong land from generation to generation. It comes only these are limited supply of freehold. So it's always worth looking at freehold. So this is just to give you a little bit of a glimpse of all the new launches that took place, whether it is at which other area. OCR, I already said the average has been selling at, that's why I say Chuan Park sold at 2,500, Lentos 2,002, Hillock is 2,002. Generally, prices sell at that kind of prices, and many of these things are also 99-year leasehold. Okay, so in fact, RCR have also crossed well above 2005, 2007. Mayor Blue, don't say, has went to 3002. That's why, can you see, the minute there is a freehold, there is a premium people have to pay. Okay, so with that, before I conclude, all I want to say, there's some further bite-sized updates and videos. Calvin Fong or as and when you can always find out from here. But okay, let me just come to wrap up here. Today, what have I spent? I promise you not more than 1 hour. The time now is 8:25. We started on the dot at 7:32. And all I want to highlight to you here is this. The real estate market in Singapore is still resilient in many aspects of it. I must say it's really resilient. And the reason it is resilient here is this: the Singapore population has grown. Number two, interest rates are coming down. Number three, broadly speaking, the economic conditions are positive. So with all these things, and this year 2025 being a Singapore celebration of the 60th National Day and all other things put together, and the market confidence in the last quarter has been very strong when a lot more transactions took place. So especially if you are looking at a back now, basically it is a freehold development. I think you have an opportunity, because when I talk about in terms of the strong attributes, going back to here, locational attributes, look at this particular property. Is it good? How much more nearer do you want to be in an MRT? Unless you want to sleep on the track of the MRT itself, then it also becomes too noisy. Okay, so in terms of locational attributes, then look at the pricing. By right, you should pay a 15% to 20% premium. In other words, if even is Becknell house is, let's say, marketed at 2005, just a hypothetical scenario, you minus 20% of 2005, you minus $500, because it's freehold, you pay a premium. So you minus the 500 from 2005, it only come to $2,000. If it is 2,450, you minus $450, it again come to 1,980. So actually the average price is cheaper than another 99-year leasehold that have been marketed, because the average of a 99-year leasehold is already 2001 to 2002. But if the 99 is 2002 and you pay 2004, your premium, you're only paying 10% more for a freehold. Is it worth considering? I think it's seriously. Then people say, oh no, but I prefer a 99 that has got big space. I want a big landscape. But let me ask you, how to get a freehold such a big space? Because it is government gazette that all the state land can only be 99. The freehold are the private land of the past. So there are not many parcels of land in Singapore that are freehold and big. In fact, you will see a lot of freehold land that comes in Joo Chiat, Geylang area and Paya Lebar area, all very small, 32 units, 24 units. These are small sites. But to have 100 over units is still a reasonably sized freehold development. So that is locational. Pricing, we talk so much about pricing that you minus the premium, then are you entering? And then the product and quality you have seen in the show flat, you can go and take a look. What do you get? If all these things are there, then you know you're not too far away within the center matrix of the three circles point. Is it a good deal? This is where you'll have to make a decision, then your budget and all other things come into play. Okay, so with that, I just want to say thank you so much for listening to my presentation all this while. And did I miss anything? Let me see. Okay, I think everything is good as I was just highlighting to you. So let me see. Any last slide do I have? No. Okay, actually, I just want to say thank you. Okay, so with that, I'm just going to hand over to the project chief to just give a little bit more highlight, and you can take it here from now on. All the best and amazing understanding for all those of you, and I'm very thankful that now we almost have close to 400 of you still listening to the seminar on a Monday night. Thank you.
Thank you, Mr. Ismail, sir. Okay, this is Chishong here. I'm your project chief IC for Bagner House. So currently, just give us another 10 more minutes because some of you might be too busy over the weekends, unable to come down. So just give us a quick 10 minutes after Mr. Ismail sir has gone through all the attributes of freehold versus leasehold, all the advantages and the very little premium that you need to pay to get this development. So we are going to walk through the show flat with you. So let the other IC, Elaine, to walk you through in quick 10 minutes. So Elaine, are you ready?
Yes, I'm ready. Hi everyone, I'm Elaine. Can you hear me loud and clear?
Yes, we can. Elaine,
okay?
over to you.
Can? All right, so let me start to share with you this development, Bagner House. Good evening, everyone. I'm Elaine, one of the project in charge for Bagner House. So today, I'm actually here at the show flat itself to bring Bagner House to you. So let us first take a look at this whole development. We can see that this is actually a low-rise development, 5-story high. And one interesting thing I want to highlight to you is definitely our MRT station, which is just at doorstep. Like what Mr. Ismail has mentioned, how near can we want to be even? This is really literally right at the doorstep already. Okay, so if you look at this whole development, it is a very resort feel development. Low rise because of the plot ratio and also because we are in the midst of all the landed enclaves. Looking at these pool facilities, we have our 25 meters lap pool at second floor. And one very interesting thing I want to highlight to you is that the rooftop terrace. Roxy Pacific is the developer. They want to bring in the modern living into this development. And that is why we have the rooftop terrace with all the very nice facilities. It is very rare for us to have a rooftop terrace with the facilities. Now imagine yourself hosting, like for example, the barbecue pits. We have 2 barbecue pits in front. Imagine yourself hosting your activities, your parties on the rooftop, and all your guests can enjoy really the very nice unblocked view surrounding you. So that is the rooftop facilities. We have the pavilion, which is a chill out area, the barbecue pits, we have a kids playground, we have function room, and also the gym itself. So 5-story, low rise, low density in a very nice and quiet, serene environment. The unit type ranges from one flexi all the way to 5 bedroom. So this is for the model itself. And in the show unit, we have 2 different show units. Show unit is 2 plus flexi and 4 bedroom. Let us now take a look at the 2 plus flexi. Let's go. So in this show unit, it is a 2 bedroom plus flexi. The size is 753 square feet. Come on inside. Right, so as you enter from the main door, you will be greeted by your kitchen as well as your living area. So this kitchen is actually nicely tucked to one side. All the furnishing that you can see from here is all provided by Roxy. And also you have all the white goods that comes together with it as well. Now in this particular layout, what I really like best is the very spacious living and also the flexi space. So over here, developer has dressed up this flexi space as your workstation. So this can be your workstation. You can even enclose up to be a proper study room. And what is even better is that the use of the flexi space over here, you can actually dress this up as your dining area. So you can actually put your very spacious dining table over here. Because for 2-bedroom layout, very seldom you actually will have a very spacious dining space. Most often your dining space will be together with your living area. So with this flexi space, it is really up to your creativity of how you want to utilize the space. And if we were to look at the living area, so if you do have a dining separated from your living, the whole space over here that you can see, it will be a very big living space. And of course, you have a balcony. Right. And then we will come into the bedrooms. This is a 2-bedroom layout. So on my right side is where you have your common bedroom. Something to highlight on the master bedroom. This is the master bedroom of a 2-bedroom. You can see that this is actually a king-size bed display, and you can actually have 2 side tables with comfortable walking space. Looking at the master bathroom, I actually personally like how they actually, the color theme of the bathroom is very light color, very neutral and beige. With the correct choice of the design, it actually enhances the whole bathroom space over here. So this is actually for the 2-bedroom, 2 plus flexi. So over here in Wagner House, we actually have got 2 plus flexi, and we also have a even bigger layout for the 2-bedroom, which is 2 plus guests. So of course, it's not in the show unit, but do contact your agent so that they can actually explain to you more in details on the different floor plans. So this for 2-bedroom. Let us now take a look at the 4-bedroom show unit. So again, in the show flat, this is where you can see the model from here. 2 show unit. Just now we have ran to the 2-bedroom, and now let us take a look at the 4-bedroom show unit. In Wagner House, the 4-bedroom size is actually at 1,249 square feet. So this is the show unit. Let us take a look from the main entrance. So this is where I come in. Once I enter the main entrance, I'll be greeted again by my very spacious living and dining space. So it's actually a separation. You can actually have a proper dining area that over here, it actually displays a 8-seater dining set, which you can even sit up to 10 packs. So this is a dining space that we have. And in front of me will definitely be my living room. And of course, the balcony. So on my right side, I will have a dry kitchen. I personally do really like this dry kitchen area. You can actually use it for food preparation, your breakfast table, breakfast preparation area. So with all the carpentry, top and bottom cabinets, all provided by developer. And when you come in, over here, it's where you have your wet kitchen for heavy cooking. And this is something that I would like to highlight to you also. In the middle, there is actually this glass panel in the middle of the living and kitchen, separating the living and kitchen area. So I think this is very ideal, especially for mothers like myself, right? When you want to do your cooking and your washing, you can actually be watching your kids from here as well. Or if not, you can actually be watching your TV while you're doing your dishes. So over here is actually where you have your wet kitchen. And in this particular layout, you actually have your balcony that links again from the living to kitchen area. So over that side, this is where I am at the living room area. So very unique kind of layout where you have your balcony linking your living room and your kitchen. So let us now take a look at the bedrooms. The first common bedroom on my left. So this is a 4-bedroom layout. And I want to bring your attention to this room in particular. In Wagner House, a lot of the 4-bedroom, the developer actually emphasized a lot on the bedroom size. Coming here and you can take a look for yourself, a very spacious 12 square meter common bedroom. This is where you can have your super single bed or even up to a queen size bed with still ample space for your study table, and even your children can be around playing here with a very spacious play area over here. So this is a common bedroom, size 12 square meter. Okay, next. In this layout, we also have got, of course, the third common bedroom. And over here will be my bomb shelter on the other side. Lastly, the master bedroom. So in this particular layout, we have our, again, as I mentioned, they place a lot of emphasis on the room sizes. So over here, we have a very spacious master bedroom displaying a king size bed. And then also ample space for your wardrobe space and also your dressing area. Not forgetting in this layout, we actually do have a balcony for your chill out area where you can have your me time over at the balcony. So this is our 4-bedroom show unit at Wagner House. So last but not least, just give me one more minute and I would like to share with you one interesting fun fact. Let us go out to the show gallery area. So again, Wagner House is actually at our previewing stage. So do come over, contact your PropNex agent who invited you for the session and come over and take a look. Now, as I mentioned, just give me one last minute and I would like to share with you one interesting fun fact. Over here, this is where Wagner House is located. So just now, as you mentioned, Sungai Bedok MRT station is just right at the doorstep. And this MRT station is actually an interchange, meaning to say it's actually the TL line and also the downtown line. So what I want to also highlight to you is that from Mountbatten Road, this is where Mountbatten Road, all the way to Upper East Coast Road, on the side of this road, as you would drive, right, you can from here, Mountbatten Road, all the way to Upper East Coast Road. This side of the development, they are all mainly plot ratio of 1.4, meaning to say they are all low-rise development. Although some of them are actually freehold, but like what our boss has mentioned, it is very difficult to find a huge freehold land plot, and especially over here with the land size, where the plot ratio is only at 1.4. Next, the interesting thing is if you were to look at the TL line, this is where the TL line, the stations are, and most of them are actually located at along the Marine Parade Road, which means to say over this side, developments are mainly leasehold in tenure. But one interesting thing is that as the TL line reaches Bedok South and all the way to Sungai Bedok, it actually cuts to Upper East Coast Road. And that is why we have Wagner House over here, a freehold tenure land with units of 100 units and above with the MRT at doorstep. So to all my audience out there, Wagner House is still prevailing and until Wednesday afternoon. So if you have not come to the show flat, please contact your PropNex agent who has invited you for this session. Come over and take a look for yourself. With that, thank you for your time. Thank you very much.
Okay, thank you, Eileen. So we have come to the end of the seminar. So like what Eileen has mentioned, we are still prevailing until this Wednesday, 15 afternoon. So do contact your agent who invited you here to take a visit at the show flat. You'll be impressed. Okay, see you guys. Thanks for tonight. Good night. Bye-bye.